Let's talk about India now. Donald Trump has imposed a 26% reciprocal tariffs on India, calling it a discounted rate compared to other Asian nations. While these tariffs are lower than those on China, Vietnam, Indonesia, and Thailand, they still pose significant challenges for Indian exports. The big question that we're raising on the show tonight is that how will this impact India's economy, and can Prime Minister Modi negotiate a better deal? Let's talk about it now. Trump's announcement of sweeping trade tariffs has shaken the global markets. His new trade policy enforces a universal 10% tariff on all the imports coming into the United States starting April 5, followed a country specific tariffs based on trade deficits effective from April 9. India finds itself among the countries affected with a 26% levy imposed on exports. The 26% tariff on Indian exports is lower than the 34% on China, 36% on Thailand, and 32% on Indonesia. However, India still faces higher levies than Japan, which is 24%, South Korea, which is 25%. While this discounted tariff might seem like a relief, it still put pressure on Indian industries that rely on exports to the United States. First, let me tell you about the possible immediate impact on the Indian businesses, then we'll dive into other dimensions. The Federation of Indian Export Organization, FIEO, has expressed concerns over the tariffs, stating that they will impact key industries such as electronics, jewelry and gems, pharmaceutical industries, refined petroleum, auto parts, and machinery. FIEO Director General Ajay Sahai believes that while India is better positioned like competitors of Vietnam and China, the tariffs will still squeeze profit margins for the exporters. Then comes banking and trade. Banking and trade experts argue that these tariffs are based on exaggerated calculations, including custom duties, alleged currency manipulation, and GST, goods and services tax. This shift in US trade policy from America first to America alone could disrupt global supply chain, and Indian businesses are bracing for potential shocks. Ajay Bagga, a banking and international markets expert, highlighted that while India's domestic industries may not feel the immediate heat, export-driven sectors, for example textiles, engineering goods, and electronics, will be hard hit. The impact is already visible in the market reactions, with the metals and oil seeing a sell-off, while pharma companies remain in a wait and watch mood. So the big question is, can India, or let me say Prime Minister Modi, negotiate a better deal as Donald Trump says he is a friend? Well, there may be a silver lining. Trump has signaled that he is open to negotiations, and India is already in talks with the US for a bilateral trade agreement called as BTA. A day before the tariffs were announced, India reportedly agreed to the terms of reference for the deal, which aims to bring down duties on both the sides. The trade deal is a part of Mission 500, which seeks a double bilateral trade in goods and services to some 500 billion US dollars by year 2030. The Indian government is actively pushing for an early resolution, with the negotiations expected to conclude by the fall. And if successful, this could help India mitigate some of the tariff related losses and secure a better trading position with the United States of America. So the limited point that I'm trying to make here is that while India's tariff rates is lower than any other nation in the South Asia, in our region, the impact on exports cannot be ignored. Businesses in sectors like electronics, gems, pharma will have to absorb the higher costs, at least in the short term, unless we are not able to negotiate. The Indian government is pushing for a trade deal that could ease these burdens, but until then, exporters will have to adapt to the new tariff reality. Whether this situation turns into a long-term setback or a strategic advantage will depend on how swiftly India negotiates a relief deal with Washington.